In this video, we're going to go through the valuation change important update. Now, more specifically, I'm going to go over what are important updates in the first place, how you can actually receive one, why they're so important to your process as an investor in terms of monitoring stocks, how you can actually use this valuation change update in your own process, and I'll go through some examples of the different outcomes that you can receive on this particular topic, and then finally I'll touch on where you can go to do some more due diligence on the information that's provided in these updates. So for starters, what are important updates? Well, it's pretty much in the name, but they're brief summaries of important updates or developments that have occurred in the underlying business or the stock that it's about. So next part is, how do you actually receive an important update? So it's very simple. On the Simply Wall Street platform, all you need to do is either have a stock in your watch list that you're watching or have a stock in your portfolio that you actually own. Once you've got a stock in either one of those areas, those companies then are eligible to receive important updates on. So you'll either see these important updates on your dashboard or they'll be mailed to your inbox as a direct update. Now, why are these important updates so important? Well, part of the whole research and investing process is monitoring stocks, whether it's monitoring stocks that you're potentially or you're considering investing in, or monitoring stocks that you already own. This particular form of notification and important update allows that process to be much easier. So it helps you remain informed on the fundamentals. Like I said, in the earnings reports or executive departing the company or inside transactions, these are important developments. And by putting a company in your watch list or portfolio, it allows you to stay up to date with these fundamentals without having to actually go and find the information yourself. Which leads me to the next point, being it helps you save time during your monitoring and research phase. So without having to go and do that research yourself and find out that important update by looking at the company's quarterly reports or annual reports or SEC filings or any sort of other data source, we inform you when that update occurs, and so it really helps you save time by cutting that amount of time needed drastically. So let's have a talk about this topic we're going to look at today, the valuation change update. In this update here, you're going to receive updates on a whole bunch of data points. Specifically, we're going to cover the 7-day price return. We'll look at the last traded share price. We're going to have a look at the PE and the PE of the industry. And we'll also have a look at the forward PE and the forward PE of the industry. Now, one thing to keep in mind is that we're not going to cover all four. For the first PE and PE of the industry, we'll cover that if there's no earnings estimates for the company going forward and for the industry going forward. In that respect, it's basically like there's no analysts covering the company. If there are analysts covering the company, they have provided some estimates for what they think the earnings growth will be for the company or the industry. We'll have a look at forward PE instead, because if you're familiar with this metric, a PE ratio is simply the share price divided by the earnings per share, and a forward PE is very similar, but it's the share price divided by the earnings per share, whatever the earnings per share is expected to be in 12 months time. And this basically just gives you an idea of like what the earnings growth is expected to be. So it's a similar sort of metric, but tries to take into account future expectations as well. And we'll also cover two other metrics, and they are the total shareholder return and the fair value estimate. So total shareholder return, just to give you some context, is provided just to give you some context around the recent share price return, 7-day share price return, and if it's anything you should be concerned about. And the fair value estimate is also to provide some context around like if the business is trading at an appealing valuation thanks to the recent share price change. So now let's have a look at some examples. In this particular example, it's the same one that was on the previous screen, and we're going to have a dive into the data and how we can do some more digging on it. So this particular one is an example when the 7-day share price has risen. And what we mean by this title here, being the investor sentiment has improved over the past week, is related to that share price rise, right? So as you know, share price is basically a good indicator of investor sentiment around a stock. So if a share price is increasing, that's basically saying that investor sentiment for that stock is improving as well, right? Like they think it's going to do better in the future because share prices are forward-looking. And alternatively, on the converse, if share prices were decreasing, that's what we'll cover in the next example. It's when investor sentiment is deteriorating, right? Because share prices are forward-looking, that means they now have lower expectations of the future. So that's just one thing to keep in mind when you see that title there. Now, as for the update itself, it says after last week's 20% share price gain to $25.42, the stock trades at a forward PE ratio of 28 times earnings. So that's interesting, but we need to go and get some more context to understand that update fully. Now, the next part does give us a bit of context. The average forward PE ratio is 19 times in the aerospace and defense industry in the US. Interesting. So that tells us that it's trading at a higher multiple than the industry that it's in. We can then go and look at the company report to try and find some more context, and I'll show you how to do that in just a sec. Next, it says that Simply Wall Street's valuation model estimates the intrinsic value is at $40.54 per share. So from there, comparing to the current share price, we can see it's apparently trading at a discount, which is quite interesting. And I'll show you how to get some more insight on that. So the first thing we would have a look at is to try and see if there's any news as to why the share price has increased 20% in the past week. As you can see here in this example, this is the 20% share price is talking about, the increase, and here there seems to have been a whole bunch of developments in the days leading up to it. So what we would do as an investor is we get that update and then we go here to this particular part of the report, read these updates and see if there was any catalysts or underlying developments in the business that then led investors to have an improved sentiment about the stock. The next section we'd have a look at is still in the valuation section, but also in the future growth section of the company report. Here we can see the PE ratio compared to the industry PE ratio, and this is the existing PE ratio, not the forward PE. And as we saw, it's trading at a higher multiple than the industry, and we may think straight away, oh, it's therefore more expensive. However, it's important to remember that price to earnings ratio isn't enough information on itself. You need to also be able to consider what the future growth estimates are. And here we can see that the company is expected to have very high earnings growth compared to the industry, right? So that helps us explain or understand why the PE for the company might be higher than the industry. It's because investors expect that the company is going to have a lot of earnings growth. So that's why they're willing to pay a premium compared to the industry. Now, the next section we'd have a look at is the valuation section. And like we saw in that last up point, it's basically just to see the comparison of the current share price versus the fair value. Just to clarify, this is not a buy or sell recommendation. This section is simply to give an indication of what a fair value could be based on a few inputs and assumptions. And now why we would go to this section is we would have a look at the view data and see what the inputs are in the model. And the reason being is because we would have a look at the news at first that we saw. If there was any underlying catalyst of, like, say, a new product being released, you could then see that news and be like, oh, well, I think this new product is going to contribute greatly to the company's free cash flow growth in the future. Therefore, I would use a different free cash flow number in this particular model, right? So this would just help you give some context as to, like, what the models are versus the news that came out recently. And this model updates here as analysts update their estimates. So it may, like, given that news that just came out, it may take like a couple of days or maybe even a week or so for analysts to revise their models and release new estimates. So this could then change after that share price move. So that's something to keep in mind. Now, the last place you could have a look at is the markets page, and more specifically the industry for the particular company you're looking at. Reason being is you may have looked at that news section and there may have been no particular catalysts or underlying developments that have driven the share price change, and you may think, why has the stock risen 20% when there was no change in the business? It may be because there's some industry news, right? So that's when you can go to the industry page here and see if the whole industry has risen. So for example, maybe the government decided to increase its spend on defense, on the defense budget, and all players in the defense space have increased as a result. That might be one way you could find more insight on the share price appreciation, because investor sentiment of the whole industry has improved. Now, the next example is a 7-day share price decline. And as I mentioned, the investor sentiment has deteriorated over the past week, and that's based on the share price movement, right? Because the share price is forward-looking. This particular example says after last week's 32% share price decline to $11.48, the stock trades at a trailing PE of 8.7 times earnings. Now, that seems cheap, but we need to get more context again. So the average forward PE is 13 times in the tobacco industry. Interesting. So it seems to be trading at a cheaper multiple. We'll get more details on that in a second. And here we can see total returns to shareholders is of 113% over the past 3 years. So this data point is here to give us some context of this 32% decline, right? So while we look at the 32% decline and we go, oh my God, that's like a big decline. What's gone wrong? This data point here gives us some context of, like, okay, it's had a very big decline recently, but it's performed well over the past 3 years. So trying to keep things in perspective of the longer term. So let's try and get some more insight on all this data here. First, we would have a look at the price history and performance, and we can see here, oh, okay, there's actually been a spin-off, so that's been the reason for the share price decline. It's not it's not like the underlying business has deteriorated, it's just that, like, the company has sold off a portion of its business, and therefore the stock has declined as much as the value of that business. So that helps us get some context straight away as to why there was a big decline in the past week. Also, you could have a look at the recent news and updates. If it wasn't an update there in the share price performance, you could have a look here and see if there's any coverage from analysts, be it Seeking Alpha or within Simply Wall Street, covering why the stock has declined so much in the past week. The next section you can have a look at is the future growth section. And again, this is just to give some context to the valuation we saw. And as we saw, it was trading at a cheaper multiple than the industry. And this seems to add up, right? Because in this particular example, it's not expected to have as much earnings growth as the industry, which is why investors aren't willing to pay as much. Now, one thing to keep in mind is that in a unique situation like this with a spin-off, it may take analysts a week or two to revise their models, since there has been a whole part of the business that has just been sold off in that spin-off. They will then come back and revise their models, and with the new business having lost 32% of the business, they'll revise their earnings growth estimates and come back, and these numbers will update as a result. So one thing to keep in mind is if it was of recent news, these numbers will then be updated by the analysts who are covering the stock. So it's usually worthwhile giving it a week or two. Finally, where can you do more due diligence? So we covered a lot of them here, but you could have a look to get more context on the valuation change update. You can go and have a look at the company overview and just check out the news. See if there's been any recent updates that have been any catalysts for the underlying developments in the business that will have driven that share price appreciation or deterioration. Next, you can have a look at the valuation and future growth section to get more context on the PE ratios and comparing the company to the industry. And lastly, you can go to the markets page to try and see if nothing else before that provided context as to why the share price has deteriorated or improved over the past week. You can go to the markets page and actually check out, okay, how has the market performed as a whole, and how has the industry that this stock is in performed as a whole? Because it may not be company-specific news that has resulted in the share price decline or increase, right? For example, it could be interest rate hikes or interest rate cuts, right? So as we know, our interest rates act as a form of gravity on equity valuations. And so if that particular stock, or if any particular stock, for example, was trading and then news came out of an interest rate hike, that would actually bring a lot of valuations down because interest rates mean that the future cash flows are discounted back at a higher rate. So it could be news like that, and this market page here would be a very useful place to go to try and find out insights like that. So that's how you can use this valuation change update. I hope this video has been helpful. Thank you so much for watching.